Howdy, everybody. Welcome to Liberty Call. Today is Thursday, July 17, 2025. Hope you're having a fantastical day out there in the interwebs. It's pretty nice here today. Sun, a little clouds, no rain like yesterday. It was pretty gross for most of the afternoon. But anyways, like I said, hope you're having a good day. Kind of a boring news day. Haven't been a whole lot of things to talk about. I mean, the TV, they're talking about Trump and tariffs and blah, blah, blah. It's just more of the same. To get a research report out today, as far as retail sales, but yeah, it's been kind of boring. All right, well, markets hovered near record highs as strong retail earnings and cooling global tensions offset lingering Fed and tariff concerns. Tech and consumer staples carried the day. PepsiCo and TSMC rallied, boosting the Nasdaq again. Fed officials sent mixed signals. Kugler warned rate cuts are off the table for now, while Daly hinted at two later this year. Can't get their story straight. Meanwhile, Citadel expects a $1 trillion corporate buyback wave to keep stocks levitating. So before we break all the news down, I need some help from you. If you can give me some thumbs up, a like, share, subscribe, a follow, and press the notification bell. All right, let's get to the markets, see how they did today. Dow Jones up 0.52%, 230 points, closed at 4445. S&P 500 up 0.54%, 33 points, closed at 6297. NASDAQ up 0.74%, 153 points, closed at 2884. The VIX down 3.79% today. It's at 1651. Canada up 0.86. Brazil Brazil up 0.04, and Mexico up 0.37. Let's see, going to Europe, Germany up 1.49, the UK up 0.52, France up 1.29, Netherlands up 1.37, Spain up 0.78, Italy up 0.92, Switzerland up 0.34, and Portugal up 0.02. Russian exchanges read today. The MOEX down 0.54, RTSI down 0.83, and the overnight markets, the Nikkei was up 0.6, Australia up 0.9, New Zealand up 1.48. In China, the Shanghai up 0.37, Shenzhen component up 1.43, China A50 up 0.04, DJ Shanghai up 0.59, Hang Seng down 0.08, and the Taiwan weighted when it closed on the 16th was up 0.91. All right, good stuff. Let's get into the market recap. S&P 500 flirts with record highs on surging retail sales. Netflix earnings due. The S&P 500 hovered near record highs Thursday as markets absorbed a mix of strong economic data, corporate earnings, and political theater. A lot of that going on these days. June retail sales surprised to the upside, rising 0.6% month over month and easily beating expectations of a 0.1%, signaling resilient consumer demand despite ongoing trade policy uncertainty. The Philadelphia Fed Manufacturing Index also returned to positive territory, and weekly jobless claims ticked down to 221,000. Adding to the picture of economic stability for now. Despite the strength, rate cut expectations remain intact. The Fed's June minutes signaled two cuts later this year, with the first possibly arriving in September. Still, New York Fed President John Williams pushed back, saying it's too soon for cuts given inflationary pressures from tariffs and persistent uncertainty. Well, I would argue that since prices have not gotten anywhere close back to 2019 levels, that's still inflation, folks. Earnings season picked up steam with investors eyeing Netflix's Q2 reports. While expectations are high due to its streaming dominance, analysts warn sentiment may be overly optimistic. PepsiCo posted a strong international performance, and GE Aerospace beat earnings and raised guidance. Taiwan Semiconductor also smashed forecasts, buoyed by strong AI demand. However, United Airlines flagged weaker earnings due to Newark airport congestion, and GSK fell, that's GlaxoSmithKline, after the FDA rejection of its blood cancer drug. Lucid stock surged 35% after announcing a robo-taxi partnership with Uber and Nuro, a rare bright spot in the electric vehicle sector. Meanwhile, Trump again stirred markets by first denying and then indirectly endorsing the idea of Fed Chair Powell's resignation. The White House continues to escalate tariff tensions, now eyeing a deal with India after one with Indonesia. Talks with the EU remain contentious over a looming 30% tariff, with no signs Trump will extend the August 1st deadline. Markets remain on edge, balancing economic resilience with geopolitical risk and central bank hesitation. Yeah. It is a mess out there. I mean, as far as the tariffs, I mean, Eh, I mean, it's going to work out one way or another. I have a problem with trying to fire Powell. I mean, granted, Trump put him in the position that he's in right now. So it's like, come on, dude. You installed this guy. And I mean, granted, my issues with Powell are not that, he won't do whatever the president wants. The Fed chair is supposed to be a bit independent, but, Powell was at the helm during all the money printing in 2020 and 21. Stood there with a straight face while the Treasury Secretary Janet Yellen said that inflation was transitory. That means temporary in easy words. So yeah, I mean, if you want him, if you have problems with him, I mean, you had no issue when he was inflating the monetary base and causing a bunch of inflation and problems for the American people. But now that he's not helping you out with getting interest rates down so that you could refinance the debt, well, that sounds like a big problem for you, bud. All right, let's get to the next article here. June retail sales. This comes from First Trust. Mr. Nate Gursey put this together. U.S. consumers showed renewed strength in June as retail sales rose 0.6, beating expectations and ending a 2-month decline. Revisions to prior months were also upward, and the gains were broadly distributed, with 10 of 13 major categories advancing. The auto sector led the charge, rebounding 1.2% after May's steep drop, and now up 6.5% year over year. Core retail sales, excluding autos, building materials, and gas, rose a solid 0.5% and are up 4.5% year over year. However, the pace has slowed to 3.8% annualized in 2025, reflecting both tariff-driven front-loading and tighter monetary policy. Services spending, which isn't well captured in this goods-heavy report, saw encouraging signs from the restaurant and bar category, up 0.6% in June and growing at a 7.4% annualized pace this year. This suggests consumers may be shifting spending from goods to experiences, likely in response to tariff uncertainty and pricing volatility. The underlying message is nuanced. While consumers remain active, the impact of higher interest rates is gradually slowing the overall trend. The data contradicts more bearish recession takes, but caution remains as monetary policy continues to tighten. Elsewhere, jobless claims fell by 7,000 to 221,000, while continuing claims ticked up slightly, pointing to a still resilient but slow labor market. On the factory front, the Philadelphia Fed Manufacturing Index jumped to 15.9 in July from a -4 in June, so that's a pretty big jump, signaling improved sentiment in the region's manufacturing base. Meanwhile, import prices edged up 0.1% and exports rose 0.5%, with year-over-year figures showing muted inflationary pressure from trade. Interesting. All right. Well, that's kind of a glass half full, kind of way to look at things. All right, get to our last article here. This one's from Zero Hedge. Study finds Congress is out of sync with America. Who would have thought? All right. A new study by the Conservative Institute for Legislative Analysis, the ILA, reveals a significant ideology disconnect between members of Congress and the voters they represent, particularly among Republicans in deep red districts. Yeah, because super conservative people do not want wasteful spending. They don't want all this welfare spending. They don't want all this warfare spending. They want the federal government to do what it's got, what its jurisdiction actually is, which is defense, diplomacy, and ensuring a free trade zone between the states. Those are the three things that the federal government is only supposed to do. All this other crap is illegal or unconstitutional. I don't know if you want to say illegal, but anyways. Drawing from over 100,000 congressional votes and the Cook Political Reports Partisan Voter Index, the study assigns lawmakers a limited government rating in LGR and compares it to partisan leans for their districts. The findings are stark. More than 2/3 of lawmakers received a failing grade for ideological alignment. Many Republicans from solidly conservative states such as South Dakota, Kentucky, and Mississippi voted far more progressively than their constituents' preferences. Well, see, that's where you should probably go back to the old days where you would, tar and feather your politicians and maybe string them up from a tree. Let's see. Voted for more. South Dakota Republicans averaged a 24.3 point leftward shift from their district's ideological lean, while Rep. Hal Rogers of Kentucky posted a 63% progressive deviation. In contrast, Representative Marjorie Taylor Greene nearly perfectly matched her district's profile. I mean, whether or not you like her or hate her, at least she represents her people. I mean, that's, I find her a little off-putting at times, but anyways. Democrats also showed misalignment though to a lesser extent, with Texas Democrats voting 3.4 points more conservatively than expected. Interestingly, lawmakers from swing states like Georgia, Virginia, and North Carolina aligned more closely with their districts, likely due to greater political scrutiny and competitive elections. The report highlights the largest disconnects in fiscal and tax policy, where many GOP lawmakers failed to vote in line with conservative principles. The ILA suggests that weak voter oversight in deep red states, along with lobbying and special interests, may be driving these gaps. As 2026 primaries approach, these ILA district-based grades could become potent political ammunition for challengers targeting incumbents viewed as ideologically out of step. The study argues that tighter alignment would lead to a more conservative Congress, not necessarily more bipartisan consensus. Well, here's the thing. The people in Washington, the representatives and the senators, really only care about maintaining the government. They don't really give two craps about us out here in the regular world. Their goal is to, the continuation of the U.S. federal government. That's why they get so hot and bothered when, someone brings up the argument of, well, maybe the states should just start leaving the republic, and, then, that, show them, show the DC that, the people mean business. But most people don't have the spine enough to do that, unfortunately. And, those of us who get stuck paying the taxes and dealing with all the burden of, being a citizen, it's just not worth it. Anyways, all right. Well, that's everything that I had to ramble on about today. If anyone needs to get in touch with me, where do you want to go? DSAFinancialGroup.com, or your financial planning needs can be addressed there. Give me a call. I'll be glad to help. All right. Well, I hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.